The Dow and S&P 500 hitting record highs Thursday afternoon ahead of President-elect Joe Biden's highly anticipated speech on the pandemic relief package. For more on that and some market views, let's turn to Chief Market Strategist Art Hogan of National Securities. Welcome back, Art.
Thank you so much for having me.
And Art, before we get to that, jobless claims today came out, rising to nearly 1 million, yet the market seemed to be shrugging that off. Why so? Are we in a bad news, good news scenario?
Well, to a certain extent, I think this is a market that is really looking forward. And I think whether it's, insurgency on the Capitol last Wednesday or, drama around impeachment or certainly weaker economic data, I think all of that is being looked through to a point where we have better economic activity in 2021 than we will have had in 2020. Certainly looking for more fiscal policy stimulus from the administration, and certainly a feeling that the log jams around getting vaccines to everybody is incrementally getting better. So all of those things point to a better looking road ahead than the road that's behind us. We certainly know that the data from December and January is going to be worse than what we saw in October and November. The virus is getting worse. Economic activity is affected by that. So it's important for us to remember that the first quarter of this year is going to be worse than the first quarter of last year in terms of economic growth. But it's also important to know that the back half of this year is going to be significantly better than we've seen in about a decade.
Right. I'll get to the stimulus in a second, but Fed Chair Jay Powell just out saying that now is not the time to discuss any changes in bond purchases, especially with the economy still far away from its inflation goals. So what does this mean for equity investors?
Well, I would tell you this, that was a shot across the bow. It was a parade of Fed speakers that was out this week. So we had about 6 Fed speakers this week, and that's very typical of the timing that we have right now. So in each one of them are on monetary policy. And there was 2 that just yesterday happened to say that if the economy picks up, we may start to think about tapering our bond purchases. And the U.S. 10-year actually reacted to that a little bit. I think what Jay Powell is trying to tell us is we are not going to change monetary policy anytime soon. Does that mean we're not going to have a tapering of the monthly purchases of bonds that are increasing the size of the balance sheet? Probably not in 2021. Now, will they start talking about that in 2022? I think that's probably the case, but I think what Jay Powell's trying to tell us is we have very aggressive monetary policy, and we will for a period of time. He certainly is going to let inflation run hotter than the 2% target for a period of time. He wants to be very clear that the monetary policy is based on getting about half of the people that lost their jobs because of the pandemic back to work before they make any changes.
And Art, as for President-elect Biden's pandemic package, what is Wall Street looking for? I've heard reports about possibly $1.5 trillion. Is there something in terms of the size that is needed to satiate investors, or the content?
Yeah, I would tell you this right now. I think you hit it right on the head with the $1.5 trillion. We may see something north of that, but I think that's consensus, and anything south of consensus would be disappointing. And I think this is a market that's planning on at least $1.5 trillion of additional fiscal policy stimulus. I think it's important. There's a lot of households and a lot of small and medium businesses that still need help to get to the other side of this pandemic. We need to build a bridge, and that bridge is built by aggressive monetary and aggressive fiscal policy, and the president's very keen on getting that message out there. So I think that's the one thing you'll be hearing about. The other things that you'll hear about, and likely are going to be market moving, are things about infrastructure spending. And this is something that I think garners some bipartisan support. So I think when you think about the industrials and material stocks that have done well so far this year, they continue to do well because that's going to be something I horizon in the first 100 days, as they say, of new presidents. And I think that's the other piece of that we likely will hear will be about clean technology, alternative energy, and all of those sectors have done well since the election. I think they'll continue to do well in 2021.
All right, so $1.5 trillion and those 2 infrastructure spending and clean energy. Then finally, earnings season kicks off tomorrow with the big banks reporting. How dismal is it going to be?
Well, I'll tell you this. It's interesting. You and I have talked for a long time. There's been twice in the 20 years that we've known each other that estimates for a quarterly earnings have gone higher.
That's true.
Coming into the earnings, they always come down. So estimates come out for the year. We'll look at the first quarter, and then we get close to earnings season, and analysts pull down their estimates. They've gone higher for the third quarter and now for the fourth quarter. Estimates are rising. Why is that? Because the economy actually did better than we estimated a year ago, and we thought about what the fourth quarter might look like. So that's good news. The only other time that happened was when we had a massive change in the corporate tax structure, and it was hard to catch up with how much of that top line growth was going to drop down to the bottom line. So I think in general, we'll have an earnings season that will be better than expected.
Well, thank you, Art, for hitting on this plethora of topics. Appreciate it.
Thank you.
Our thanks to Art Hogan of National Securities. I'm Fred Katayama in New York. This is Reuters.